those are from Gujarat. They work for wealth only. They know how to create wealth. Okay. Specifically for Diwali, many are waiting to. We believe that Lakshmi will come on the Diwali. Okay. So the goddess of wealth will come. So on Diwali, many are waiting to trade. That Muhurat trading is to only for the traditional way to make people more say attract to the market or to participate in the market. That is there. So that is Muhurat trading happens during that evening, or even if that Diwali means Diwali day is mostly market is closed down. It happens normally in the evening, 2 hours, 1.5 hours to 2.5 hours. So that is one exception. And you will see more liquidity in that short period of time also. So many traders are participating in that time, even investors. So they feel that just like there are certain things traditionally we believe we'll buy some gold or we'll buy something. So they many traders and investors believe that we'll buy some shares during this Diwali. Mihir, got it?
Yes, sir. Thank you, sir.
That is only once in a year, only on Diwali day. Not,
Okay, sir.
yeah. Okay. Now we'll move to 9:15 to 9:30. Sorry, 3:30. Okay. This is normal trading hour. We have again two things in this 9:15 to 3:30. One is block deal. Okay. Block deal, and another is auto square of time. Auto square of time. What is block deal and what is auto square of time? Can anyone say what is block deal?
Sir, basically, when certain large institutional investors or HNIs and all, when they want to transact in the market, now their volumes can severely disrupt the price in the market. So these trades are allowed pre-market, and only if only if their buying party is also decided. So the
It
idea
is
is
not pre-market, Ali. It
no,
is not
no,
pre-market.
no, as in they are only allowed if their counterparty or their buyer is also decided already. They are not open market operations. And the
Yeah.
idea behind this is to curtail the fluctuation that's going to come. So, for example, if suddenly Ambani decides to sell 1 million shares of his, Reliance will crash big time.
Yes.
So, to make sure that doesn't disrupt the operation of the market, this is happening like in a separate segment or in a segment or in a separate terminal altogether.
Yeah. So what happens here is large players are participating in the block deal. Block deal means uh, you need to buy minimum 5 lakh shares of that company, or 5 crore of values of share, crore value of share, whichever is less, you have to buy. Now, this is a separate window. This block deal is a separate window than the normal window. Separate window is provided to large players only. Okay, or HNIs, institutional investors who want to participate, they apply for it and get that window access. In that window, this 50 minutes, 9:15 to 35 minutes, 9:15 to 9:50, 35 minutes, first 35 minutes is provided to this block deal in a separate window. Okay, so this normal trading will go on, but in a separate window, this is the block deal will go on. Just like Ollie said, suppose I want to buy 10 lakh shares or I want to sell 10 lakh shares, and other party will not be there, then market will crash. Like even a large seller is coming means the market will pull down. Now, if large sellers are there, other large buyers should be there. Okay. That's how this block deal is happening. That means block deal gives liquidity to large buyers and sellers. In normal trading hour, if you have observed in the normal trading hour on Monday, we have seen the order book we have seen, na? Suppose say SBN. Now you will not able to see the order book, but here we have seen the quantity. Those quantity were not in lakhs, all were in thousand or maximum were on 100. But here minimum is 5 lakh. Minimum is 5 lakh. Okay. Now, is it serving any purpose? Yes, large players are allowed, and they are buying and selling from each other. Is it serving some purpose? Anyone?
Sir, it stabilizes the price. That's the main reason behind it.
Yeah, price stabilize. Yeah. So they have one condition: they can't punch -1 to +1% of limit order. That means as compared to current market price. So they can't punch beyond 1% of price, lower price or higher price to buy or sell. So this is just like wholesale market, okay, wholesale market and retailer market. You can say retailer market. So in retailers market, if you are going to buy some potato, you can buy 500 or 1 kilo potato, 500 gram potato or 1 kilo potato. But if you are going to wholesale market, can you buy 1 kilo potato or 500? You have to buy one box or 50 kilo potato you have to buy. You are bound to buy if you are going to wholesale market. So the person who wants to buy, suppose say 20 quintal of potato, if you will go to retailers market, you will not get that 20 quintal, because the retail seller will have only 2 quintals, 3 quintals. But if you are coming to this wholesaler, whatever quintal you want, 1 ton also he will provide. So this same thing happens. This block deal is working like wholesale market to the large players. Okay, this is like wholesale market, and the normal trading hour is like retailer market. But that doesn't mean that in normal trading hour these institutional investors or large players are not participating. They are participating, but they are participating more in this block deal. Okay, because after just say 9:50 they will not able to participate. So in market they will not able to participate in the block deal. In the market, if you see this first 35 minutes is more volatile. Have you observed? This past
Yes, sir.
35-minute, at least past around 45 to 50 minutes, you will see market is more volatile. So many traders enter at 9:15 itself if they see like gap up or gap down has happened. What is this gap up and gap down?
Sir, it's the larger block deals which suddenly
Gap
affect the
up,
market.
gap down. See, gap up means today's opening price has opened up higher than yesterday's closing price. Okay, yesterday's closing price. That is gap up. If today's opening price is opened up at lower than yesterday's closing price, then this is called gap down. So if gap up has happened, that means for that stock, that means you are bullish. That means many are bullish. If gap down happens, then many are bearish about the stock. Based on that, we strategize and we take some positions on that. Okay, that is how it is happening. Second thing in that 9:15 to 3:30 is auto square of time. Auto square of time. What is that auto square of time? Can anyone say? Anyone? What is auto square of time?
Sir, not sure, sir. If
So
it's if
this,
it's if it's regard to trading, then it's supposed to be at the end of the period.
yeah, it is regarded to trading. So this auto square of time is uh, before market close down. Some broker sets 10 minutes before market close down, 20 minutes before market close down, or 30 minutes, or 25 minutes, or 15 minutes. So suppose market is closing down at 3:30. If broker sets 15 minutes auto square of time, then 3:15 is its auto square of time. This auto square of time is nothing to square of all the intraday positions. Why we require this auto square of time? Because if you square off at 3:30, then you will not able to square off all your positions. Okay, that's why before 3:30, to make sure that all the clients intraday position has been closed out, the broker sets auto square of time. It depends from broker houses to broker house what time they set this auto square of time. All of you are clear? Yes or no?
Yes, sir.
Now another thing is called as closing session. What happens in the closing session? What happens in the closing session?
Sir, I have an idea. I'm not sure.
Yeah, please.
So one thing that happens is from 3 to 3:30, all the prices that are happening in the market, because that period is extra volatile. So in the closing session, the weighted average of all these trades are calculated, and
Yes.
the final closing price of that particular script is calculated. Because 3 to 3:30,
Yes.
because of
So
these traders only, the volatility increases a lot. So that's why you see that your last traded price and your
exactly.
closing
What
price intervene.
happens? Exactly. What happens? We have something called LTP. That is called last traded price. Okay. Last traded price. But we have another is called closing price. This LTP and closing price are different. Last traded price at 3:30 is not the closing price. Okay, in most of the markets, the closing price is calculated by considering the weighted average of last 15 minutes, 20 minutes, or half an hour, or 1 hour, depends on market to market. In our market, we calculate that closing price during this 10 minutes, 3:30 to 3:40. This is called closing session. And this closing session will consider per scripts half an hour moments, 3 to 3:30 moments, and calculate the and gives weightage based on the number of trades, or the value of trade that has happened in each of the time. More the value of the trade happens, more the weightage that time will get, and finally it will calculate the closing price. Okay, so this closing session is for calculating the closing price. To represent the actual closing price, we take this average of this half an hour, not the last traded price. All of you are getting? All of you are getting?
Yes, sir.
Saranya?
Yes, sir. Yes, sir. This is understood.
Okay, now another session will come after 3:40, is 3:40 to 4 o'clock. This is called post closing session. What is this post closing session?
Sir, I'm not sure what happens there, but if you try and place an order in this period, you cannot even place a post-market order. You have to wait. I think it's to do with settlement or verification of trades or something.
Yes. You are correct. You are correct. You have read somewhere correctly. The same market will again open up at closing price. So price fluctuation will not happen. Market will open up at closing price, and it will come at 3:40. Now price will not fluctuate. Price will be freezed. Trade can happen with that single price. In case during this 3 to 9:15 to 3:30, some of the trade has not been completed, or some open positions are there, intraday positions are open, you can square off at this closing session or post closing session with permission from broker, because you need to pay little more penalty over here because you have not closed down here at before 3:30, but you have an option to close. But when you close, you don't have any option to fluctuate the price or give the limit price. You have to close at the closing price. Price fluctuation will not happen. Okay, so this is called as post closing session. All of you are getting? Yes or no?
So just one question.
Yeah.
What about calculation of NAVs for mutual funds? Does it happen in this period, or is it a separate thing altogether?
Actually, now that calculation of NAV has been changed, but NAV calculation happens by considering the closing price. The timing of that price calculation timing is there. So per day NAV calculation timings are there. I just missed the exact timing. So during that time only NAV calculation will happen. NAV will consider that price of that stock at that particular moment.
Okay, and is that SEBI guideline or is that at the discretion of the company?
SEBI guideline.
Okay, sure.
Now SEBI has come out with one guideline that the day earlier it was the day you are you are buying. Suppose you are a investor. Okay, you have bought some mutual fund. Okay, and that day NAV will get calculated. But this NAV calculation now has changed that whenever you are buying this, and the fund manager or fund house is getting that money, maybe after 1 day or 2 day fund manager is getting money. The moment you are buying, NAV will not get calculated. The moment fund manager, that means money has actually transferred to fund manager or fund manager has realized that money, NAV will calculate based on that. If you want, we can have one session on mutual fund if you are interested. Okay, sessions in a market, all of you are clear?
Yes, sir.
Now we'll move for the circuit breaker. So whatever we have discussed has been given here. Yeah, we have missed one thing is bulk deal. Bulk deal is just read through. If you are buying more than 0.05% of company's equity, then it is called bulk deal. It may happen in single transaction or more than the transaction by a single investor. But bulk deal is block deal is 35 minutes. That is 9:15 to 9:50. Okay, and the minimum value is 5 lakh shares or 5 crore value, whichever is less. The transaction size should be 5 lakh shares or 5 crore value. Now, all of you are aware about these market participants who are participating, issuer, investors, and intermediaries. All of you are aware. We call
So
them
who are
as
intermediaries?
yeah, I'll come to that. 3 eyes in the market. So first, who are issuer? Who issue?
Sir, for equity, they are the companies themselves. For your derivative segments, it's whoever opens the interest, like whoever generates the open interest.
Okay, derivatives. Derivatives is not a fundraising technique. Derivatives is a risk management technique.
Okay, so in that case, it can be companies whenever they want to
Yeah.
issue primary equity, or it can be whenever they want to raise debt from the market.
Yeah, either equity or debt company, or government also issues. Government issues GSEC, government securities, So government issues mostly bond or fixed income securities, not the equity. Government will not give you ownership. Then if you will become owner of that government, then there will no meaning of that government. Okay. They are the issuer. They need money, so they raise from the market. So when they raise, there are two products. One is equity, another is debt. Yeah. Then there are so many ways equity can be raised. One of the way is IPO. Then they can go for FPO. Then they can go for preferential issue. Have you heard about this preferential issue? Or they can go for private placement.
Sir, I think it is issued only to certain investors.
Yeah. Yes. Come again. They can, if they want to raise from foreign, they can go for external commercial borrowing or FCCB and FCEB. So these two are debt only. This FCCB, FCEB and ECB, or ECB is purely debt, and FCCB, FCEB are hybrid securities because they have convertible features. And equity, you have heard about ADR and GDR. Have you heard about ADR, GDR? American Depository Receipts and Global Depository Receipts.
Yes, sir.
So these are the equity options, and on debt, either in India you can issue bond, or from outside you can go for external commercial borrowing. For outside in hybrid category, you can go for convertible bonds, foreign currency convertible bond, or Indian convertible bonds. So partly convertible and fully convertible bonds are there, or not convertible. If it is not convertible, then it will be only bond. Then we have something called FCEB. I hope all of you have heard about this, foreign currency exchangeable bond. What is that foreign currency exchangeable bond? It has a component to exchange that with others. Okay, how does it work? How this foreign currency exchangeable bond is working? So if I hold that,
But can it be a debt
it's a debt
instrument?
instrument.
So can it be a debt instrument that has been issued in a foreign currency in general?
Foreign
So
currency,
basically, if
but
you want to repatriate your money, then then you're not exposed to an exchange rate risk.
so you can exchange to whom? So foreign currency
No,
exchangeable.
no. So an Indian company can issue a bond denoted in USD, for example.
Hmm.
So now because the good thing in here is, or suppose they are purchasing bonds in foreign currency
Hmm.
or of a foreign company. So when they want to take their money back to India, they are no longer exposed to a risk of foreign exchange fluctuations and all.
No, that is good. That's why FCCB, FCEB are there. So they will get benefited of if INR is depreciating, then they will get benefit if they are transacting in US dollar because they have raised fund through this. But what happens? Why I am asking? What is this exchangeable? The convertible component you understood, like it will be there for some period fixed income securities, then it will convert it into equity. But what is happening in the exchangeable? If I hold as an investor, I hold one foreign currency exchangeable bond. How does it work for me? It has one exchangeable component. What is that? What is that exchangeable component? I can exchange with others. So I can exchange with others means I can exchange with other companies, not other investors. Okay. How other companies? Suppose I hold Tata Motors FCEB. Okay. I can exchange it into Tata Steel, okay, or say TCS, any of the group companies of Tata. If it is a exchangeable bond, you can exchange within the group companies, okay, Tata Group or Birla Group or Reliance Group or Hinduja Group. You can exchange this particular fixed income security or convertible security among the group companies, okay, if you wish to exchange. Got it? Have you got it?
Yes, sir.
No. Okay. Now investors, who are investors? Can anyone say? Who are investors? Who are investors? Anyone? Give us one example who are investors.
So you have
Am I
retail
audible?
participant HNIs, you have foreign investors, institutional clients.
Yes. So we divide these investors into two categories. Okay. One is institutional investors and second one is non-institutional investors. Okay, non-institutional investor. These institutional investors can be FPI, foreign portfolio investor, or it can be DII, domestic institutional investors. This NIIs, non-institutional investors, can be HNIs, high net worth individuals, or can be retailers. Now this FPI or DII, it can be a insurance company, it can be a mutual fund, it can be a pension fund, it can be a municipal authority, it can be any government. Even Singapore government is one of the largest FPI in India. They invest in India. Domestic also, domestic institutional investor, mutual funds, these insurance companies. In the insurance, we pay them premium and we get 2% or 3% return per annum, but they earn huge return from the market. Insurance companies are the largest in institutional, domestic institutional investor in India. So indirectly, you are participating in the market if you are buying some insurance premium, but these insurance premiums are not to earn profit or not to earn a return. Only you can insure yourself. So that is how it is insurance. But what happens? We are considering that insurance as an investment. Can insurance be an investment? Can we consider insurance as an investment? So Sabka, you can switch on all of your video. Whether are you getting what I am saying? Rahul, are you there, Rahul?
Yes, sir.
So can insurance become insurance
Yes,
can
sir.
be
Yes,
considered
sir.
as an investment?
Yes, sir.
Okay. Uh, Rasi Jan, can
Yes, sir.
insurance be considered as an investment?
I believe so.
Okay. So insurance, actually we should not consider that insurance as an investment. Insurance is to insure your life. For investment, you come for either you go for FD if you want lower return, or you go for market mutual fund if you want to further don't want to take more risk. Then you can go to equity market, or you can go for real estate or gold, those are all investments. Okay, you can go to all those parts, then you can go for investment. So don't consider insurance as a investment. Insurance is to insure our life. They are providing some amount of return, but that is not for the investment. If you invest, you will get huge returns, not what this insurance.
So also in insurance, you won't get any returns. You'll only be insured when you are at loss. So it's nothing you could look forward to.
We are getting some amount of return, but that is not the investment's return. Like you can't say for return you are buying insurance. Okay, if your sole objective is return, then don't go for insurance. Your sole objective is to insure yourself. That's why you are going for insurance. Okay. If you want to get return, you go for other investment avenues that are available. You go for real estate, you go for gold, buy gold, or you go for buying equity or mutual fund units. Okay.
So that's what I was saying.
Hmm.
That
There is something called term insurance. You have heard about?
yes, sir.
So here we are not getting anything from the insurance company. Then we will say we are in loss. Why many people are buying this term insurance? Because the insured amount is huge. With a small like a portion of a premium, you are insuring your family. You will not get anything if I will die. I have suppose a term insurance. I will not get anything because after I die,
Yes, sir.
the
It's
insurance
the
company will not go
if you
and
die
give me
between
anything.
certain period of time, your family would get the returns.
Yeah. So you are ensuring the security of your family. They will get good amount of return, good amount of insurance money. Okay. Now coming to intermediaries, who are intermediaries? We have one surplus unit, another is deficit unit. These deficit units are issuer. Surplus units are investors. Okay, they give to the deficit unit by investing with different instruments. That instruments we have discussed, either equity, debt, or hybrid securities. And directly, whether a surplus unit, or suppose this is a buyer and this is a say issuer, or it is selling the say security. Now whether buyer can directly contact with the company and buy it, can
No,
buyer
sir, you'd
directly
need
contact?
somebody in the middle.
Yes.
You'd need somebody in the middle, sir.
Yeah, so we need someone in between. Since it's a standardized market, we need some intermediaries. Who are they? They are exchanges, broker houses, okay, brokers, clearing corporations, depositories, merchant bankers, underwriters, RTA, register and transfer agency. So all those who are helping in this process. So this is the major process that requires all the intermediary to come in between, because the chances of default is there. They will ensure that there will be no default. Okay, default will not be there. Then they will also ensure that someone is not misguiding, and like if the deficit unit is misguiding the surplus unit, they will also take action against the deficit unit. So exchange is the primary regulator of all the listed companies. Then it comes to SEBI. If exchange is not able to handle, then it will transfer to SEBI. SEBI also does its own way of examining the companies who are violating the norms, LODR norms. Have you heard about this LODR? Anyone? Have you heard about the
Sir, not
LODR?
sure, but is it? Sir, I'm not sure. I read it with regards to Cafe Coffee Day. So yesterday they settled a claim under that, right? So it's about disclosures. I'm not sure, but
Yes, it's disclosure. Actually, all the listed companies has to disclose based on LODR regulation. This is called listing obligation and disclosure regulation requirements and disclosure requirements. So whenever one listed company is there, listed company has to disclose on quarterly basis and yearly basis of all the happenings of the company, including financials, change of owners, change of products, if any merger acquisition, all those has to be disclosed on a continuous basis. So these intermediaries are helping to smoothen the process of what happens between issuer and investors. And the broker को दलाल बोलते हैं हिंदी में. दलाल को कोई पसंद नहीं करता है because dalal is a we feel that it's a illegal activity. But in market, they are not broker, they are member of the exchange. They are called as member. Since they are coming in between, in all over world, they are named as broker. But they are registered member with the exchanges. Okay. All these market intermediaries, whatever we have discussed, have been given here. One is debenture trustee. They are required for issue of bonds and take care of. They are the like custodian of all these bond issues. And I have shown you how many intermediaries are there in the SEBI website. In the first class or second class, have I shown you?
Yes, sir. Yes.
Now, yeah.
Yes,
So
sir.
this is the link. Yeah, this is the link for that, and whatever number it was, whatever number are there, they will consider. Now we'll come out with circuit breaker. What is this meaning of circuit breaker? The other day we were discussing what circuit breaker is. The circuit breaker concept came from electrical department. In electricity, what we do, if any problem will happen in this room, suddenly power will go, automatically power halt will be there. So is to save that building or save to us or save our office or save our home. And this is also called as speed breaker on the road. Speed breakers are also there. In 1987, USA stock market crash has happened. And that time, USA government has formed one committee to understand what is the cause of that crash. Can we predict before crash happens? Can we take some measures that will prevent that crash to happen, or that will save us from that market crash? So that was headed by Mr. Brady. So that was called as Brady Commission. They have submitted report in 1987 itself to US government, and they have suggested we should have some speed breaker in the market or with the prices, so that we can control the price fluctuation. When we control the price fluctuation, we control two things. One is liquidity, another is volatility. Okay. One is liquidity and another is volatility. In this liquidity, we want to increase the liquidity and reduce the volatility. That is what the main objective of circuit breaker is. When circuit breaker came, first USA has applied, and later on all other countries have started applying. Now, how do we see our market, or what are different kinds of circuit breakers? Have we discussed about kinds of circuit breaker?
No, sir, we have not.
Okay, so let us take this circuit breaker is of three types. One is stock wise, second one is sector wise or firm specific, IT sector, FMCG sector, or auto sector, sector wide, Third is market wide. Market wide circuit breaker. So in the stock wise, we apply this circuit in each of the single stocks. Okay, each of the stocks, and we halt that trade in that stock for some time. That is called stock wise circuit breaker. But in our market, we have something called price band. What is this price band? This price band is the situation where prices will not fluctuate. Prices will be freezed. Once the circuit has hit to the stock, price will be freezed for some time. After that, it will resume for price fluctuation. But in between, you can trade with that single price. That's how it is called price band. But if a completely stockwise circuit breaker will be there, then you will not also allowed to trade. Since it's price band, you are allowed to trade. Second category is sector wise. If fluctuation in one sector, suppose say IT or FMCG or bank, to represent that, we consider that sector's index. Okay, index of that sector. If index of that sector has reached the stipulated level, either moment we call it, suppose say plus minus 5%, either in the upside or downside, both are not good for the market. If you drive very slowly, it is also not good. If you drive so fast, that is also not good. So if you drive very slowly, someone will come and hit you because you are not going. Those who are from Mumbai, if you go through this Mumbai local train, how many of you have gone through Mumbai local train? Anyone? Kadam is not there today. Yeah.
Yes, sir, there.
Gaurav, you have traveled with the local train?
Yes, sir, for almost 5 years. College.
So how was your experience?
No, sir, it is very tiring. Even if you miss the train by one train, next train is all jam packed and all. You have to be very punctual.
Yeah, you have to be so speed. If you are slow, then people will throw you or they will push you also. So the speed at local train, you have to maintain that speed only. If you are very slow also, that is very bad for you. So in road also, if you are so slow, what will happen? From your back, one speed vehicle will come and hit you. So both the things are not good for market. Sector wise means trading will halt for the companies which are there as a part of that sector. Okay, so if Nifty Bank has hit a circuit breaker, all the companies in that bank Nifty or banking stocks and the listed banking stocks will halt. But in our market, in Indian market, we don't have a sector-wise circuit breaker. We don't have. Okay, we don't have sector-wise. We have stock-wise, that is price band, and market-wide. Okay. What do you mean by market-wide circuit breaker? This means if market will go up or come down, then circuit will hit. If market will go up or come down, how I will represent market?
So the index,
The
Nifty or
index.
Sensex.
Either Nifty, that is representing Indian stock market or NSE, or Sensex. The idea behind this market wide circuit breaker is don't allow the whole of the market to fluctuate too much. Okay, in this Nifty, if Nifty has hit minus 10%, it has come down, then trading will totally halt in NSE, trading will totally halt in BSE, trading will totally halt in XMSE. since it's market-wide circuit breaker, whole of the market in the country will stop trading, or trading will not be allowed for those. Okay. Now what happens whenever this Nifty hit it, all will close down. Sensex hit it, all will also close down. So trading will not allowed. We have three things: 10%, 15%, and 20% for market-wide circuit breaker. Yeah. So 20% limit. Either moment, either it has gone up or it has come down by 10%, then it will hit the market-wide circuit breaker. Okay. Now we'll see how our market has been designed. Whatever we have discussed are given over here, and whatever this price limit, farm-wise and market-wide. If you see this price limit or price band, some countries are applying 2 to 6%, some countries are having 30%, Thailand, even this Mexico is having 30%, sorry, Malaysia is having 30%. So if 30% moment or 5% moment or 4% moment is there in the particular stock, then trading will halt for that stock. What is the benefit when we apply this market-wide circuit breaker? There are two schools of thought. One school of thought is saying we get benefit out of this market-wide circuit breaker, and another is saying we are not getting any benefit, but this is again putting us some cost. Okay. Now you say whenever we are, suppose one sudden news came when market was on, and all trader has point order without understanding that news. But if we will halt the market for a while, then trader will get time to digest that news. Yes or no? If we halt trading will be halt for some time, half an hour, 45 minutes, 1 hour or 2 hours, then trader will get some time to digest that news. Okay. So when they digest that news and come out, they will not go against the wind, or they will punch with a correct order. Then it helps to reduce volatility and protect investors and provide time to restore the equilibrium between buyer and seller. So this provides liquidity, creates liquidity, and this provide opportunity for increased information flow. If sometime halt is there, then it provides information flow. During market session, we have not discussed about lunch break. So 9 to 4 o'clock market is there. Have you found anything on lunch break? Anything you got on lunch break? लंच ब्रेक टाइम चाहिए या नहीं चाहिए? Suppose now you are working with any broker houses and you are with a dealing room dealer. How you will take lunch? I
Sir,
hope I am
ideally, you're not
audible to all
allowed
of you.
to. You have to wait till the market closes.
तो 9 बजे से 4 बजे तक खाना नहीं खाओगे? There are some markets like China, they have 45 minutes to 1 hour lunch break. But we don't have any lunch break timing. If lunch break is there, market will close for that time. Again, when market will open with a pre-open price session will happen, like pre-open size price decide, means discovery, then it will open it. So it is a tedious activity. Again, it may impact to the liquidity of the market. So what happens during this lunch break? Who are there in the dealing room? If you will able to, maybe in case you are getting a job in a dealing room or you are able to visit to a dealing room, you will see they can't leave that system for a second also. They used to have food in one hand and operate the system in another hand. Those who are not in dealing room, they have some time to have lunch, but dealing room is mostly very sensitive. So if we give this time, then liquidity will be increased. Okay. But those who are against this circuit breaker, they say this creates undesirable situation. It may create panic in the market, and it may create magnet effect because price accelerate price movement toward the pre-announced limits. It may create chain of defaulters. But these opponents are arguing on their way, but market is moving in a smooth way when we have applied this market-wide circuit breaker. Okay. Or stock-wise circuit breaker also. Circuit breaker helps to reduce volatility and increase liquidity. Only thing, how we design. When we design, we have to decide how much percentage we will keep as circuit limit. For stocks, it starts from 2%, it goes to 20%, 25% also. It depends on stocks, liquidity and volatility. So for market, if you have observed 2 years back, China has removed completely the market-wide circuit breaker from their market because it was hitting continuously and their market was off for 10-15 days. Every day it will open, then it will hit market-wide circuit breaker. And that is how the market-wide circuit breaker. In India has come out with the regulation or allowed to apply market-wide circuit breaker from 2001, and there are certain developments in market-wide circuit breaker regulations. But when it comes to market-wide circuit breaker, in India, we have only applied 8 times market-wide circuit breaker so far. 8 times. That too 2 times is from this COVID only. Last year, 2020 March, anyone has observed? Market-wide circuit breaker has hit it twice. Have you observed? क्या हुआ क्या? All are silent. Gaurav, are you there? Am I audible?
Yes, sir. Yes, sir.
Yes, sir, you're audible.
Okay. So 2 times last year we have applied. I will come to that point. But this application of 10% circuit breaker, we have, I told you, 10, 15 and 20% market-wide circuit breaker. If you come to this 10% market-wide circuit breaker, either Nifty or Sensex, either it has gone up or came down, plus or minus. If it hits, Nifty hits a market-wide circuit breaker 10% moment before 1 p.m., then there will be 1 hour halt. If it is 1 p.m. to 2:30 p.m., then 30 minutes halt. If it is 2:30, after 2:30, then there will be no halt. Okay. Then if you come to 15%, 15%, then if it is before 1 p.m., 2 hour halt will be there. 1 p.m. to 2 p.m., 1 hour halt will be there. So yes, I have written over here. So after 2 p.m., halt for the day. It will halt for the day. If once market reopens and it has hit at 20%, then trading will stop for the rest of the day. Now this 20% is as compared to what? Is compared to your 10% is compared to what?
20% of your opening price, sir.
Not opening price.
Sir, your price at 915 basically. That is
No,
it.
no. Your
In that case,
price
it's
is,
gonna be.
yes,
In that case, it's gonna be your. In that case, it's gonna be your previous circuit. Would that be correct?
previous closing price. Previous day closing price.
Oh, closing price. Okay.
Yeah, previous day's closing price. So whatever closing price is there, it will compare today's opening and today's current market price. Then it will calculate this percentage of movement. Okay, this is how market-wide circuit breaker. If you observe, we have applied 8 times market-wide circuit breaker. One was in 2004. Somehow this missed. I have to expand this. 2004 first market-wide circuit breaker is applied. That was the election day result. NDA lost and UPA came into power. So that was lower circuit. Lower circuit means market is hit minus 10%. This low, if you see type of circuit, all are low. Only one time that was upper circuit, that was 2009 election day result. So election day result has hit 2 times market wide circuit breaker. Again, the third time it was supposed to hit, it was somewhere in 2015 or 14. It has reached 15. Yes, it has reached 9%, but it has not reached 10%. That's how it has not hit it. Then 2006, there are some margin pressure on SEBI side. Some margin regulation came out. So and taxation issues, then it is hit, and this promise participatory notes has been removed to restrict the foreign inflows. So that was in 2007. 2008 subprime financial crisis. Then in 2012 there are some wrong order punching has happened. Instead of 6 crore of value, it is the trader has punched 6 crore shares. So then the value has gone too high. Then suddenly market crash has happened, lower circuit. Then in 2020, since 2012 to 2020, there are no circuit in these 8 years. So this 2020, 13 March, due to COVID-19, it has hit lower circuit, and 23rd also it has hit lower circuit. If you see, in within 10 days, it is hit twice, because this COVID is so scary, and it has resulted lots of negative news that has hit. Now, if I am a trader, how do I take decision or strategy based on this market-wide circuit breaker? In the history, wherever this circuit has happened, it has bounced back on the same day. When I say bounce back, if the circuit has came down by 10%, on the same day it is recovered that 10%. It will come up by 10%. That is how our market has behaved. So how you will take a position or your strategy? If a market wide lower circuit has hit, okay, that means market has come down by minus 10%. Yes or no?
Sir,
And
you cannot say what will happen once it opens. It can go further down also.
yeah, so whatever has happened in this 8 times, it has recovered all the time. Only one exception was this 7 time it has recovered. Only one exception was this 23rd March. So sometimes we have to also take that risk, because it was too negative, like a shutdown of all the countries have started shutdown, and many people are dying. There are no solution to COVID, and it was further, it has gone down. It has not bounced back. So that type of risk you have to consider. But in normal, whenever it is proved that Indian market has recovered on the same day, whatever down was there, then you can take one buy position over here. Whenever halt is there, it will reopen, you can take buy position. Then whenever upper circuit is there, in the upper side 10% will hit. Okay, it has gone up. Then the next is it will come down by 10%. That bounce back will happen. If it will come down by 10%, what will happen to you? How you will take position? So you will take one short position here. Okay. All of you are clear?
Sir, you cannot be sure of this, right? It can still go down.
Yeah.
So why take a short position? Ideally, you should avoid trading on these days, right? Unless you want to gamble.
Those are traders. They get benefit on these days. When market is too volatile, traders
Sir,
only.
it's a gamble, right?
It's a gamble.
if it's
Yes,
hit,
you have to speculate. Yeah, you have to
okay,
speculate.
sir. And one more thing. So, like you said, for any stock, the limit is 20% per day, right?
For any stock?
Circuit limit is 20% per day.
No,
Right?
no. For all stock, it is different.
But
Some stock
it's a
maybe
maximum of
2%.
20%, right?
Yeah.
But it's a maximum of 20%, right?
No, it is also not that. Maybe it is 25%, 30% also. It depends on stock volatility. So exchange decides what will be the stock wise. Stock wise, we don't have a freezed circuit breaker. Market wide, we have this 10, 15, 20, but not for stock wise.
Okay, so
Minimum
then, sir,
is
one more
2%.
question.
Maximum can be anything.
Okay, then one more question, sir. For all these IPOs that come out, they close approx 80% high, 100% high. So why is there no circuit on them?
So that 80% and 100% happens in the listing price and sorry, one is issue price and listing price. Okay. And listing price. So on the listing day, they don't apply this circuit listing price. So they don't apply because the history should available for that price to decide how much percentage. Now all of you are clear about these two concept, or should I tell you what is issue price and what is listing price? So the
is the
difference,
listing price the opening price of the day?
yeah.
Okay.
So listing gain. So we get listing gain or listing loss with the difference between this issue price and listing price. So listing day price is just like pre-open session every day happens from 9 to 9:15. On the listing day session, pre-listing day session happens for 1 hour. Okay. 50 minutes market will receive order, then within 1 hour it will decide the opening price for the listing or listing price, then listing day gain or loss will come. So that's how we don't apply on the same listing day. It is expected that on the listing day either it will go up or come down. If it is very good company, it is oversubscribed, then it will go up, and if it is not good company, then it will come down. So all of you have you are aware that we have started from 2000 this derivative market, introducing derivative. Index futures has introduced in 2000, index option 2001, individual stock options 2001, individual stock futures in 2001. Then we came out with currency derivative in 2008, commodity in 2003, interest rate derivative in 2014. Where we have reached, if you see number of listed companies, we have shown you we are number one, like a BSE. If you see NSE's rank in the number of listed companies, NSE is number 10 because NSE is having around 2000 listed companies. If you see total market capitalization, we present 2.7% to world market capitalization. So NSE ranked 12. If you see number of new listing, NSE is number 10 in all over world, and total equity market value traded per day or end of business. So we are number 11. Total equity capital raised through IPO, then we are 14. And total equity market number of trades, we are number 3 in all over world. That means volume of trade, not the value of trade. If you see derivative segment, in single stock option, we are number 8, single stock future, we are number 2. But index option, we are number 1, and index future, we are number 9. currency option we are number 1, currency futures number 1, then commodity number 25, commodity futures, and interest rate futures number 10, interest rate options number 10, futures number 8. So this is all over world's, like India's position in all over world. So we have come out with a good position in all over world, but it is in terms of volume. Volume means number of trade, not in terms of value. In terms of value of trade or the turnover, we need to go a long way. India has to go. That is what. So we'll do now. Okay. If you see the city-wise turnover in the equity cash market, you will see Mumbai represents around 65%, 66% of total turnover that happens in a equity cash market. Next is Delhi, Kolkata, Hyderabad, Bangalore, Ahmedabad, Rajkot, Chennai. Then you see other cities are 0, 0. That means they have negligible contribution. That is how we are coming out with a, all the regulators are coming out with how to spread this news or how to spread this particular investment awareness to all the parts of India. That is how slowly it is reaching to other cities. Okay. Now we'll start the modern portfolio theory. You have class at 11:30. Do you have?
But can we stop now? Because I'm not sure how much we can achieve in just 5 minutes.
No, we can take some 10-15 minutes if you are free. You have class at 10:30.
We
Sorry,
had a class
11:30.
from 7:30, sir.
Okay. So can we do some game now? We'll just take 5-10 minutes for doing some game. We'll do some quiz, online quiz. That you will enjoy. Whatever 7-8 question only we'll do. Is it okay for all of you?
Yeah, sir. Okay.
So just go to Kahoot. If you go to Kahoot and go to play Kahoot, you can do it from mobile also. Kahoot. Then I'll just generate the link. So there are 9 questions. It will not take more than 5 minutes. So quickly we'll complete. Now you are getting like you are getting that window. It is asking to enter the game pin, right? Just enter this pin 3255888 there. All of you are getting? My screen is visible?
Yes, sir.
Okay. Ollie has joined. Yes. Join quickly. Gaurav, Rahul, Himanshi. Saranya, Manvi, join, others join. Raj. Shall we start? Why others are not joining? Around 12. Raj. Others join please quickly. I am also sharing this GAMP in our chat box so that are you joining? Anyone is joining? कुछ तो बोलो हाँ ना yes okay join please Kirti just write down Kahoot join Kahoot game then you just start so now we are starting anyone can also join in between so identifying obligation of a client is settlement clearing trading all of the above just click on the color that you are getting one answer came two answers yes quickly one more is left out your time is going off 2 seconds done clearing yes clearing is the correct one five of you have answered sorry two of you have answered correct all others have answered wrong so identifying obligation of a client that is what in the clearing it happens Ali Manvi Rahul Gaurav Himanshi only two correct answers so this will take your time of response also so pay in and payout gets completed on T plus 2 by what time 1:30 p.m. Oh, zero answer. Pay in payout happens on T plus 2 settlement by 1:30 p.m. So if I want to buy at a lower price than the market price, it is called what type of order? Seven answers came. Limited order. Good. Seven correct answer. Two wrong answer. So who are Ali, Manvi, Kirti, Himanshi, Saranya? You are in the top 5 list. You might have others might have given right answer, but your response were little late, so you got less score. These people get more score. Out of 1500 by quantity, if 400 gets traded and rest 1100 gets cancelled quickly, it is called immediate or cancel. Manvi, Ali, Saranya, Rasi, Kirti. If we are punching limit and stop loss order at a time, it is called yes, it is bracket order. All have given trailing stop or all of the Rasi, Manvi, Ali, Saranya, Kirti. Failure kill is one type of day order, IOC, DQ, all of the above. IOC. Many of have given day order. Day order is all or none. The impact cost arises because answer quickly. It is because of illiquidity. Only one correct answer. SEBI charges rupees how much for 1 crore transaction? Yes, quickly. Yes. Yes, good. 8 answers are correct. Rasi, Ali, Kirti, Rahul, Manvi are 5. So this is the last question. Pre-open session receives order from 9 to 9:08. Which order is not allowed in the pre-open session? जितना क्विकली आंसर करोगे उतना अच्छा रैंकिंग आएगा. स्टॉप लॉस ऑर्डर आज ही हम कवर किए थे. ओके, सो हु इज थर्ड? अली. Kirti second. Rasi first. And runners up Manvi and Rahul. Okay. So thank you all. Okay, please write down your names in the chat box so that I'll mark the attendance accordingly. Write down your name in the chat box. Kirti S, Rasi Mansi, Himansi, Rahul Gaurav, Ajaditya Anur, Ali. Okay, so all of you have written your name? Okay, thank you all. We'll meet on Monday.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you.